Hi, welcome back to my channel. I'm Sarah Jane and I talk about my financial journey. Today's video is all about premium bonds, and they're a type of product offered by the NS&I. The NS&I is an executive agency of the Chancellor of the Exchequer and began in 1861 as a way to offer savings products to the general public which were secure but also an opportunity for the government to borrow. So in certain types of investments you're essentially lending the government money. But the NS&I offer other products beyond premium bonds, and they vary in terms of the offering and who they're available to. But what I wanted to concentrate in this video is specifically premium bonds and talk about what they are and whether they're worth having. So what are they? They're basically the UK's biggest saving product. Over 21 million people have over £100 billion invested with premium bonds, which is a staggering figure really. And basically what it is a savings account offered by NS&I, and you put money into that, you purchase bonds, and the interest paid is effectively dictated by a prize draw. So what you can do is buy a bond, which is £1, and the minimum you can hold in there is £25, and the maximum is £50,000. So along that range you can have a certain amount of bonds, and each month each individual bond is entered into the prize draw, and there's millions of pounds each month offered as a prize. So yes, each £1 bond has exactly the same chance as winning, and they're entered into the monthly prize draw. And obviously that means that the more bonds that you hold, the greater chance that you have of winning. Now, quite controversially, at the end of last year, the NS&I slashed the prize rate for premium bonds from 1.4% to 1%. So yeah, I'm going to talk about that and whether that has an impact on whether they're now worth it and worth holding compared to, say, a savings account. So premium bonds do have a couple of great features. They're tax-free completely, so even on your winnings, which is a big bonus. I mean, that's slightly changed since the introduction of the personal savings allowance, which basically means if you're a basic rate taxpayer, you won't pay any tax until you've got over £1,000 a year in interest, and then that's slightly higher for higher rate taxpayers. But because of that, the tax-free bonus isn't necessarily as good as perhaps it once was, but it's still a good feature to have for premium bonds. And again, they're backed by the government and therefore totally secure. So, you know, if anything were to happen, that your savings would not be lost. I mean, if the government went bust, then perhaps it'd be an issue, but I think possibly the issues would be even bigger than losing premium bonds. But I mean, yeah, another good feature, but given the introduction of the FSCS and the 85,000 protection for certain bank accounts, arguably that's in place for the majority of saving products anyway, up to that limit, bearing in mind that you can only hold a maximum of £50,000 of premium bonds. So, you know, a feature that is good and useful to be aware of, but doesn't necessarily make it stand out. I think probably one of the great features of premium bonds is that they're easy access. You have to wait a couple of days for them to enter back into your normal bank account, but there's, you know, importantly, no penalties for withdrawal, and also, unlike some sort of, say, savings account which may pay slightly higher interest, you have to leave it in for a fixed period of time. That's not the case for premium bonds. If you want to release them, as I said, there's a couple of days to get it back in your bank account, but it is essentially easy access. So that leaves probably the biggest attraction to premium bonds, and that is the fact that each month you're entered into a prize draw and can win a complete range of prizes. The specific distribution of the prizes varies from month to month, but just looking at a typical distribution, 2 very lucky people get £1 million. You've got 5 with 100,000, 8 for 50,000, 18 for 25,000, and then the smallest prize is for £25, and there's around sort of over 2.5 million £25 prizes each month. So, you know, that does sound pretty good, and of course if you win £1 million tax-free, happy days, but really you would need to have your eyes wide open in terms of what are the chances of that actually happening. So looking at the NS&I website, the way that they market the products is that the odds of winning for every £1 bond is 34,500 to 1, and you'll see there that they've said that the interest rate is 1%, which is based on the annual prize rate fund. Other features that I've mentioned, you won't pay tax, and that there's a minimum of £25 and maximum £50,000. And you can see here they're saying it's great if you fancy winning tax-free prizes up to 1 million. I mean, who wouldn't want to do that? I think if we just dig a little bit deeper into that annual prize fund rate and what that means. Now, Money Saving Expert's done a really helpful analysis, and it's using some very clever algorithms as well, but it breaks down specifically what that means. So what they're saying is that on average, for every £100 you've got invested in bonds, the average yearly payout is £1. But for those astute among us, you'll have seen that the lowest payout is £25. So that's the lowest price. So you're never going to get just £1. Using Money Saving Expert's clever calculator, if for 30 people had £100 invested in bonds for a year, only one of those people would win the £25, and the others, so the other 29, would win absolutely nothing. So what you can do is look at sort of the median average winnings, and again, it's going to vary because of depending upon how much you've got invested in bonds. So you're looking at the median, so that's if you lined up 100 people, it would be the person halfway along. On average, what would they be earning? And that just shows if you've got £100 or £1,000 invested, the average is absolutely nothing. If you've got £10,000 invested in premium bonds, the average winnings is £75. Even when you get to £21,500, the average winnings is £200, which would be an actual equivalent prize rate of 0.93%. So not even getting to the 1% figure there, with £21,500 invested. So I don't know whether you could go as far as to say that it's misleading because it's based on certain averages, but you've really got to think about what that actually equates to. But at the end of the day, if you are invested, there is a chance that you can win those prizes, but you've got to accept that it's very unlikely. And those calculations for Money Saving Expert were based on sort of average luck. If you're a particularly lucky person, then you might do very well. So let's just look at some of the probability of winning the top prize, so £1 million. If you have £5,000 invested in bonds, the chances of winning the million is 1 in 849, 505,000. So that's 1 in 849, 505. Pretty unlikely. So as I've said, as long as you know that and there's a chance, but it's very teeny tiny, then that's perfectly fine. So then the next question is, well, if the chances of winning are pretty small, shouldn't I just leave it in a normal savings account? And in some cases that is the case. And again, using the useful tool produced by Money Saving Expert, they've compared some of the top rate savers versus having your savings held in premium bonds, and looked at that between having sort of 100 to the full 50,000. And what they worked out was, particularly if you're someone that doesn't pay tax on your savings, you need £5,000 or above for premium bonds to perform on average better than the savings account. Of course, if you're winning the top prizes, they're going to outperform, but this is just looking at the combination of probability and averages. So looking at that, if you had £5,000 invested in premium bonds, there would be on average an 82% chance that the premium bonds would be a top savings account. So that sort of seemed to be mathematically where the threshold was worth sort of making that jump to premium bonds. If you are someone that's paying tax on your savings, then that skewed a little bit more. So the more that you had in premium bonds, the more likely they were going to be a savings account. So that's something else to think about, but sort of that £5,000 threshold really. And remember, that is looking at a top savings account. If you're in a normal current account with basically no interest, then again, using a similar model, premium bonds are more likely to beat inflation year on year. £5,000, the odds of earning more with premium bonds over 1 year is 52%. So again, something else to think about. So I hope that was useful in terms of what premium bonds are. They're safe, they're tax-free, and you do have a chance of winning prizes each month. And some of those are really big, but those chances of that happening are very small. If you know that and are willing to make the savings on that basis, then they could be a good opportunity. I mean, if you have your emergency fund sitting in your current account, it may be something that you want to think about. Have a look at some top rate savings and maybe put some there, but you could think about putting them into premium bonds. They're secure, they're tax-free, and you do have that chance of winning. So I don't think there's much necessarily to lose, because premium bonds are easy access. So it is just useful to have that knowledge, to know that they exist and what they're about, and who knows, you might win big. If you have got premium bonds, I'd be really interested to hear what your winnings are typical across the year. Have you been lucky enough to get one of those big prizes? Any questions or comments, please leave them below. If you found this useful, I'd really be grateful if you could subscribe. Really enjoying making these YouTube videos, and it makes my day when I get the notification that I've got a new subscriber. So thank you for watching and have a great day.